Hey there, today is August 27th. This is Jim Hiles at First Capital and Financial Friday, so let's dig into that. Leaders and laggards, this is the scoreboard we're looking at each week to kind of get a feel from a sector standpoint, who's doing what. And we've seen this week the technology sector has picked up and we're back into kind of a growth mode. The U.S. 10-year Treasury is fumbling around 1.3, 1.4. So that generally is positive because when those rates are lower, generally multiples for tech are higher. And if you're not getting paid on your interest rates, tech growth is much more demand. We also have seen some differences in material stocks, XLB. These are ticker symbols. You can look them up, but materials have kind of gotten very volatile here, probably because of the lack of direction from what's going on with infrastructure and certainly the economy in general right here being in relative slowdown in the summer. We could be blaming it on the summer. It could be basically a global slowdown. We may have seen peak markets here, so that's one thing to look at. Europe and Australia, Asia, and the Far East, what we call the EFI or EFA, depending on where you're from. There's a lot of impact on the taper talk on them. Frankly, you're seeing even differences within these regions. Take a quick look at the sectors, just highlighting the two. Here's tech. You get a feel for what I'm talking about sometime. This is basically a chart looking back at what we're taking a look at here is technology versus the S&P. Who is stronger, if you will. When the chart is pointing in an upward direction, that's a good thing. It means technology is stronger than the rest of the market. And you can see also utilities down here on the bottom. Utilities have been kind of behind, lagging the market, and that's why it's been at a negative slope here for a while. But it potentially, and my little arrows here saying, hey, we could be seeing this kind of a turnaround. And this may tell you a few things, that technology in 2020 was considered almost a safe haven place to go. So you might see a safe haven effect going on here a little bit too. You also know the utilities are defensive. It's like when things get ugly, usually utilities is the place to go because people are always going to spend money on gas, light, power, things like that. So this is kind of turning. You also see on the other side here, the consumer discretionary is just sort of swooning down here. This particular laggard on the XLY related to the S&P now is falling behind further and further. So we know that the tech sector of the S&P is 25% roughly anyway. So we would expect something like this to happen, but consumer discretionary is about spending, and the consumers right now don't appear to be spending as much as we thought they would, or maybe these stocks right now just are not looked at because of what's going on with the questions around COVID. Communication services have been relatively up, and you see a little bit of a pause here in communication services, a little bit sideways. So this is kind of a new thing for them. They were leading in terms of a sector relating to the S&P, and we have and continue to like communication services, particularly because of the 5G story. So that's communication services. What we're seeing is right now kind of lagging a little bit more after a pretty good run. So anyway, keep you more abreast of what's going on. If you are interested in looking at different sector approaches or different portfolios, then here are our equity modules in terms of most recent performance. So this goes month to date, quarter to date, year to date, 1 year, and some wonky risk information on the right there, indices on the bottom. Kind of get a feel for what you should expect in the portfolios if you're in some of these portfolios, or what you should expect if you're looking to go into some of our individual stock sleeves or fund sleeves relating specifically to expectations in the equity market. We also benchmark them, our own performance, and we use, again, groups of ETFs and funds as well that we manage the allocation on. And that's what this equity allocation is a blended allocation of certain funds. And we compare it against Morningstar, SEI, Vanguard, ATIA, CREF, Goldman Sachs, AQR, just to kind of benchmark us. And we'd like to try to push ourselves, obviously, to the top as best we can. No promises here on performance, but just sort of give you an idea for how we track our performance of what you should be doing or somebody should be doing for you to make sure that you're achieving the performance you need from your equity portfolios. Any questions, please feel free to give me a call. Happy to talk about what's going on in the equity markets. Jim Hiles signing out for now.